QYLD as an investment, I'm guessing if you're watching this video, it's because you're already in the investment or you're thinking about making an investment into it. And my guess is if you're thinking of doing that, it's because you love that high yield, you love that high dividend. That is quite eye-popping. That would be my guess. But you need to be aware of this risk that the more time we get becomes more and more real. It becomes more and more obvious that, okay, yeah, this seems to be not only a theoretical risk anymore, but a very, very genuine risk. And I say all that because QYLD, generally speaking, it is a new product. Now, yes, I realize it's been around for years upon years, both in the grand scheme of how long the market as an entirety has been around. Yeah, this is a very new product. QYLD, maybe you already know this, but just in case you don't, is attached to the QQQ, the NASDAQ. So as the NASDAQ goes up and down, that is what's also influencing QYLD. Now it does sell, options, which is where those yields are coming from, but that's sort of a separate topic, and I've done videos on that. But what we see now, and as we gather more and more data, is a very real risk, and whether or not, this matters to you, that's up to you. So I'm not here to tell you what to do, but I am here to make you aware of this risk, and I'll let you factor that into your investment plans. But to best set this up, it's very visual. Let's go and take a look at what's been going on with the QQQ, which again is the NASDAQ market. And what you see here is a couple of lines that are showing some very important data points as we move forward. So the QQQ at one point, and this was back here at this portion of the chart, went up as high as that area right there. And then you can see eventually went back up to get right around that area once again before coming back down. And then when it came back down, these were the lows where it was at previously. And as it stands right now, the price has not even hit those lows. So that's the context here in regards to what's going on with the QQQ. So the question becomes, well, how is the QYLD behaving in regards to all this? So let's go up here and do a quick couple of things here. Let's change that to the same time period. So what we are looking at now are the same lines, same colors, and illustrating the same exact things. So for example, this line right here is pointing out the same exact period of time, right around that early May. That was the high. And do you notice what happened when the price came down, just like QQQ, so that would be expected. The QQQ came down, and so did QYLD. The Qs bounced, got all the way up to that tan line, and then QYLD bounced. Wait a second. Didn't even come anywhere close. It came nowhere close to getting up to that level right there. You have a big old void where it did not go as high. So in other words, relative to the QQQ, QYLD put in a lower high. Even though the Qs went on that big bounce, yeah, QYLD did bounce to be fair, but as you saw, didn't even really come close at all to those previous highs where it was before, whereas QQQ not only went up to those highs, it actually went up slightly above them. So looking back here, let's look on the flip side of things. Well, and I'll clear this out of the way. Then what happened to the QQQ? Well, after it got here, it dropped all the way back down, and as I've already noted, it has not even touched those lows. Well, what happened with QYLD? Well, it also came down. And wait a second, it went down to those lows. So again, line right there representing the same thing. Not only did it go down to those lows, it went even lower. So now we have a situation where QYLD put in a lower low compared to the QQQ. So QYLD, lower highs and lower lows compared to the QQQ, which tells you this right here. QYLD has a very real, and some may even argue, no, Clay, mathematically speaking, and again, I don't want to go down those rabbit holes, but mathematically speaking, QYLD is going to go to zero or get very close to zero before there's a reverse split that needs to happen, and reverse splits are just nasty situations, but that is where QYLD is headed. And that makes perfect sense when you see this visual. To think that QYLD continues to drift downwards when the when QQQ, talk about a mouthful, when the QQQ has shown big bounces and yet QYLD does not bounce as much, and then when QQQ comes down, but then QYLD comes down even further, that's just a natural drift that's been occurring and will continue over time. So are you okay with your principal amount essentially dropping to zero? Now, I realize the arguments, and this is why I'm not here to tell you what to do, but maybe you're saying, well, Clay, I know with that high yield, I'm going to get paid back more than my principal, and okay, like I said, I just want you to be aware of QYLD. It's slowly deteriorating. It's slowly going down, and your principal amount is going to slowly deteriorate over time too, as it seems right now. And I say that because, once again, this is a new product. So maybe there's something there's a blind spot here, but when you get the yields that you're getting at those levels, there is going to be a trade-off, right? You don't get the best of both worlds. You don't get massive growth and massive yields like QYLD pays. And the trade-off here is that, as you saw, a slow drift downwards, which very reasonably speaking, now, to be clear, I'm not saying this is going to happen next week or anything like that, but you saw the correspondence, and you saw how those two charts are next to each other, and QYLD is certainly deteriorating when QQQ is not. So just keep that in mind. Are you okay with your potential investment drifting down to zero and then getting stuck in a reverse split? I don't know. That's up to you. I don't know your investment objectives. I don't know your personal situation. So I can't say any of that. I just want to point out this information so that you can make that decision for yourself. And then one final note, if you like what I did with the charts here, if you kind of like the split screens and all that sort of stuff, then I'll put a link down below to where you can get these charts for free. In fact, they'll pay you to use these charts because it comes from a platform and broker that's always running promotions. So they will, like, literally, they'll pay you, whether it's through money or free stocks that they give you for signing up to use their platform. So like I said, I'll put a link down below if you're interested in that. But yeah, QYLD, you got to be okay with the risk that your money could very well be going to zero. And if that still fits in with your plan because of that high dividend yield, that is up to you. But yeah, the data is pretty alarming at this point, showing that deterioration. So are you okay with it? Are you comfortable with it? Only you can, only you can offer that. Are you in QYLD? Do you have any thoughts on it? What about some of these other ones? There's RYLD, I think XYLD. Are you in any of those? Let me know down in the comment section. Am I missing something? Is this data somehow deceiving me? Let me know down in the comment section, and I'm always open to feedback. But like I said, pretty straightforward at this point, at least from a visual standpoint of the problems here that QYLD is presenting. But as always, I'm definitely open to any observations that you have. So I'd love to hear from you down in the comment section. Check out the channel as a whole. If you like what you see, then I would love to have you as a subscriber to the channel. So definitely hit that subscribe button. Everybody take care, and thanks for watching. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.